Hello and welcome to another Smaulgld live stream. It is Saturday evening, the 23rd of November, 2019. So that means it is Saturday Night Silver with Smaulgld. And tonight's topic, gold ETF holdings are just 10 times more valuable than silver ETF holdings. Last week we talked about whether the gold and silver rallies of 2019 were over, and we were discussing that it seemed that the demand for gold, if investment demand, it started to peter out, and perhaps that traders, which drive the price of gold and silver, have unwound their long positions and are locking in gains for the year. Now we may get a year-end rally, as other investors like to do some window dressing just to say they had gold during the year. They may buy it at the end of the year. But generally, I think we're looking to January for any price movement. And also holding down the price of gold and silver is this constant threat that we may have some type of China deal. Also, we've seen some upward tick in interest rates from negative to a little bit less negative, or if they're positive, to a little more positive. So that is also weakening the gold and silver. But tonight I want to talk about gold and silver demand. And the investment side, we're going to briefly talk about the actual physical demand on the industrial side. But I thought it's interesting, one of the theses that we have here on Smaulgld is that silver really is not, or has not, gotten a boost from its industrial side. And when it has risen, it's risen because of the increase on the investment demand, while the industrial side was constant. Now, I know a lot of the silver pumpers try to say silver is so useful in our life. Silver has so many uses. We could not live our life without silver. But what they don't talk about are the actual numbers of the demand for silver. The actual numbers for physical demand for industry, things like solar panels, things like electronics, have actually gone down in the last 10 years. Now, solar panels, there has been a massive increase in solar adoption. But what companies are doing is they are significantly lowering the amount of silver per solar panel. So let me give you an example of what I'm talking about. And then we're going to talk about how the investment side is actually the best hope for silver. So here we have Refinitiv Metals. I think it's a Reuters joint venture. And it says silver demand from the solar sector is forecast to decline 9%, only 71 million ounces in 2019, which would be the second consecutive fall, owing to something we've been talking about for years now, ongoing thrifting of silver in the solar panel modules, even as global solar panel installations rise. Now, that's the whole point, is you can't just say my solar panels and silver is set to skyrocket because of solar. Solar is becoming, they're really learning how to do with minimal amounts of solar, of silver per solar panel. Let's just briefly look into the numbers here. Now, this is from the Silver Institute. Back in 2011, the amount of silver required in solar panels was 67 million ounces. Now, you would think over the last 7 years we'd see a massive increase. We've seen at least a 3 or 4-fold global increase in solar uptake since 2011, but the amount of silver used in solar panels in 2018 was just 80.5 million ounces. It was 88 million ounces in 2017, and now they're saying it's going to decline to 71 million ounces in 2019. Now, put that in perspective. Annual silver mining production is about 850 to 900 million ounces a year, so it's less than 10%. And so it's gone from about 7 or 8% to almost 10% of global silver mining production, which makes it a modest demand driver, but it's not growing rapidly. And in fact, it looks like the growth has tailed off the last couple of years. But let's take a look now also at electronics. 2010, 10 years ago, 301 million ounces used in the manufacture of electronics. Now, you would think with all of the internet, the mobile phones, the third world all coming online, there'd be a greater demand for electronic devices. And yes, indeed there are, but those devices are smaller and they use less silver. So In 2010, you had 301 million ounces used for electronic devices, and last year that number dropped to 248 million. So we're not seeing a big increase in industrial production demand for silver. That's point A. Now, point B is, well, then how is silver going to rise? Well, silver, if it has those numbers, while they're in slight decline on the electronics and they're in slight increase on the solar, they pretty much wash each other out, because overall industrial demand went from 633 million ounces in 2010 to 578. So we almost can call that a wash. It's about a 5% loss over 10 years, but it's not promising. It's not like, wow, the amount silver is so useful. People are going to use it for yoga pants, and the next thing you know, there's no silver left. That's what you get from the pumper channels. But the real wild card for silver is and has been the investment demand, which I point out all the time is not very great. So, for example, 850 million, 900 million ounces of silver mined every year. Well, about 180 of that goes into investment demand, coins and bars. And then there's also an ETF amount that goes, a certain amount that goes into the ETFs. But here's the thing. The amount that goes into coins and bars has dramatically changed over the last 10 years. So, for example, in 2009, only 79 million ounces, less than 10% of silver went into the manufacture of silver coins and bars. But in 2015, nearly 300 million ounces were used. Now, that's a massive increase. That's the biggest increase of any particular demand segment of the silver market. However, that went down from 300 million in 2015 down to 150 million in 2017, back up to 180 million in 2018. And this year it might get to about 200 million. So, silver becomes in demand physically or in ETFs for two reasons. If the price is low, then investors do pour into the metal because they think it's a bargain. And then traders also tend to move in when the price is low. But here's the interesting point I want to make about silver demand right now. First, let's just take a look at the price, what I was talking about here. 2010, this is a Smaulgld chart from the Silver Institute data, to 2018, jewelry demand is up 11%. Silverware demand is up 17% over those 9 years, and that's largely because Indians buy silverware. Pretty much no one else does, but they are a growing population with a growing income, and they buy silverware. Coins and bars, they're up 4.1% since 2010, but really down significantly since 2015. But look at that industrial demand. The industrial demand is down. It's down less than 10%, but it's down 8.7%. That's what you hear everybody saying. Silver is so useful. We could not lead our lives without silver. Silver has so many uses. Silver conducts electricity. Silver is shiny. We know all that, but it doesn't translate into there's a demand for it, but they learn how to use less of it. So your big drivers for silver, physical silver, are going to be jewelry, silverware, and coins and bars, unless there's a new industrial demand for silver. People talk about weaponry. There's not that much silver in weapons. There may be a couple of monster boxes and intercontinental ballistic missile, but you're not going to drive silver demand by munitions development. You're going to drive it if millions, tens of millions of Indians continue to buy silverware, jewelry. Remember, Chinese do not buy silver. Americans buy more silver, not on a per capita basis, but on a overall basis than the Chinese, and Americans don't buy that much silver either. Chinese are heavily weighted towards gold, so India is your best bet for silver demand in the form of silverware and jewelry. Coins and bars, that's also a very American thing. Americans buy a lot of silver for investment. Europeans, less so. Why? Because Europeans have a value-added tax on silver. They do not have that on gold, and gold is more traditionally held by Europeans as an investment than silver is. But here's the interesting point about silver demand with respect to ETF, and then also we're going to take a look at the COMEX. Right now, while the ETF demand is somewhat, you can see at the far end of the right of the chart, tailed off a bit. It had a big increase, and it's been increasing pretty much since 2010, irrespective of the price. You can see it going from 500 million ounces to 700 million ounces, even though the price has fallen during most of that period. But in the last 3 or 4 months, the amount of silver in ETFs has gone from 550 million ounces all the way up to 700 million ounces. Now, I did the calculation on that. Those 700 million ounces in ETFs at a market price of, what, $17 an ounce? That's $11.9 billion. That's a nice piece of change. Now, that's an indicator of institutional investors, individual investors, people who are not taking delivery of silver. It's an exchange-traded product, exchange-traded fund. You go into your Schwab account, your Fidelity account, your TD Ameritrade account, and you type in SLV. You say you want $100. They give you a fraction of a share, and they say you own a fraction of whatever amount of silver. You don't get to see the silver. You don't get to take delivery of the silver, but you own exposure to the price of silver. Now, supposedly when you buy that silver, it's backed by a certain amount of silver, and that's what you're seeing on the chart are the ounces that are supposedly held in those silver ETFs. And there's supposedly 700 million ounces, and that is worth about $11.9 billion. So that's a nice amount of money, but let's take a look at the gold ETFs, and the gold ETF is wildly popular. There's a number of them, but the largest one being GLD, and you'll see that there's about 85, 87 million ounces of gold in ETFs collectively. Now, that amount is worth $127.5 billion. So it's just a little over 10 times the amount of gold to silver. Now, all of you gold-silver ratio people would say, well, that would mean that because gold is being invested at a rate of just 10, 11, 12 times to 1 to silver, that the price of silver should only be 12 times less. That's complete nonsense, but that's how people look at it. But it is an interesting fact. Another interesting fact is the COMEX gold warehouses have $13.98 billion worth of gold. And let's take a look at that gold amount. It's about 9.32 million ounces. This number is really largely irrelevant. This is just the amount of gold that the COMEX warehouses or approved warehouses have in them in the deliverable form or the eligible form to be traded and delivered on the COMEX. There's 9.32 million ounces, and that's worth about, at the current price, let's say $1,500, maybe $14 billion. But let's look at how much silver is in the silver COMEX, the COMEX warehouses. There's 316 million ounces. Now, that silver, the 316 million ounces, is worth about $5.5 billion at about $17 an ounce. That means that there's only 3 times the amount of notional amount of gold in the gold ETFs as there are, the gold COMEX warehouses as there are in the silver COMEX warehouses. Again, meaningless to a certain extent, but it does show that there is a significant silver investment demand in the form of ETFs. There's 700 million ounces locked up in ETFs, and there's 316 million ounces of silver locked in the COMEX depository warehouses. And again, on a dollar basis, that's the value of the COMEX silver is about a third of the value of the COMEX gold, and the value of the silver ETF is worth about a tenth of the amount of the gold ETF. So I think it's pretty significant that there is a significant amount of silver investment demand. I think that's your best hope if you are a silver bug for the price to rise. Not this nonsense about how useful silver is and they're finding more uses for it every day and you can use it in yoga pants, and that's not driving silver demand. And silverware probably is not going to drive it either, although it's nice to have, but unless it catches on globally where people buy per capita the amount of silverware that Indians buy, which the Chinese don't, the Americans don't, the Australians don't, the Canadians don't, the Italians don't, the Swiss don't. No one does to the extent that the Indians do. So the real demand for silver, or the wild card demand, the one that could, quote, set silver skyrocketing, would be the investment silver demand in terms of COMEX contracts, and then the silver required to meet those contracts, as there's a delivery option, And then also in silver ETFs, there's a lot of interest apparently in silver ETFs, even though the price is not rising. All right, now speaking of silver, I want to share, I did get another nice gift. I get about a nice gift a week. I've received some gems, a peace dollar recently, and most recently received this nice looking silver bar, Season's Greetings 1983. That is a 1 ounce bar. It's from the National Mint. Now, speaking of these bars, these make very nice gifts. I'm happy to have received one. But you can give them for Christmas or the holiday season, depending on what you do at this time of year. But they're very nice gifts. You can buy them through the Smaulgld site as well. I mean, you can always point you to the Smaulgld affiliate links on SD Bullion, Money Mills Exchange, and Golden Eagle Coin. Each of them, they have these types of 2019 silver coins, silver rounds, and silver bars with either Santa Claus on them or a nativity scene, something festive. And this one just particularly is 1983. And they make good gifts because you probably pay about $20, $21 for them. There's a fabrication charge. You're not going to get them for $17. And I suppose if you were to go sell them to your coin dealer, he'd probably give you a spot or a little less. But you'd go on eBay. I mean, this particular one here, there's some people that want this particular 1983 silver bar. They might pay $30, $40 for it. If not, if you can't find a buyer or the person you give it to, they may just want to hold on to it. So it's a very nice gift. And if you are going to buy these gifts, I suggest that you can purchase them through the Smaulgld site or through the affiliate links below this Smaulgld BitChute and YouTube. All right, so thanks again for that. And I don't, unless people ask me who send me gifts, I don't call out their names for respect of privacy. I don't read their notes unless they say go ahead and read it. But that was a very nice gift that I did receive, and I do want to thank the person who sent that to me. All right, let's just take a quick look now at, speaking of silver and Indian rupee. Remember, all these charts, everything I show you on the Smaulgld YouTubes and BitChutes, I do put on the Smaulgld website so you can see them all in one place without having to listen to 30 minutes, 40 minutes, and scroll around looking for the chart that you want. They're all on the Smaulgld website. It'll put blog posts along with the BitChute and YouTube videos embedded right there. So if you go to smaulgld.com, you can always find your favorite charts. Now, this one is silver and Indian rupee. Indians, we mentioned, when the price of gold and silver goes higher, they don't buy it. I mean, it makes sense. That's general economics. You buy less of something when it's more expensive. However, in America and other places, when the price of something rises, like Bitcoin, people chase it. But Indians don't do that. They have a long history of buying gold, and they know the worst time to buy gold is when it's going higher. The best time to buy it is when it takes a dip. And gold and silver imports have dropped dramatically in 2019, especially in the last 4 or 5 months when the price of both of them rose significantly, over 20%. Well, then against the Indian rupee, it rose 35%, both metals. So they stopped buying. But now the price is coming down a little bit in Indian rupees. You can see that in silver. And let's just take a look at that also in gold. So there'll be a little bit more gold and silver demand, I anticipate, coming out of India as a result of the drop in prices, which probably will last to the end of the year, and then we may get a pickup at the beginning of the year. There you can see on that chart the Indian gold price gone down a bit, but still significantly higher than it was at the beginning of the year, but still should bring some buyers back to the market in India. Gold in Australian dollars, gold in Canadian dollars, also down from the peak of September. Early September was the peak of gold globally. The price of gold in Australian dollars almost at $2,300. It's now down to about $2,154. Didn't check the price today. Gold in Canadian dollars, these are prices of Friday, same thing. Gold hit over $2,000 an ounce in Canadian dollars, over $2,050 in September. Now it's trading about $100 lower. At about $1,943. Also, talking about gold demand, a lot of that price increase was due to investments. We mentioned ETF, but also banks recommending gold. They somewhat backed off of that, and here's JP Morgan and Citi saying they moved away from gold. And they mention rising interest rates. But Bloomberg says gold takes a hammering. I don't think it's getting a hammering. It's up over 20% this year, but you can take these headlines with a grain of salt. But let's talk just briefly about gold jewelry and gold supply. So gold jewelry is between 40 and 60% of gold overall demand. Some of gold jewelry is investment, but let's just say 50%, 40% is investment, and then 10% is industrial, roughly. But younger buyers are not buying gold, even in China, even in India. They are less likely to buy gold than their older counterparts. And it says here, Gen Z buyers. Now, they're not the youngest. Yes, they're younger than millennials, are considerably less likely than those in other markets that bought gold jewelry in the last year. Now, part of that is cultural. They're younger. They may be more interested in digital things and Snapchat and stuff like that. But they also have less money, too. But I think they're not as interested in gold. I think that people under 30, people under 40 generally tend to place less value in stuff, tactile items, and more. And partially, I think it's because they don't have the money for it. But even if they had the money for it, they may be less interested in those types of things and more interested in experiences and digital assets. So gold doesn't seem to be is high on the list as a status symbol, perhaps, in China for younger people and throughout the world. We'll just have to wait and see. And it's the same for investments. We're going to see digital assets become digital gold, Bitcoin, all that stuff. But just keep that in mind. Now, gold supply. Now, central banks are moving more into gold, but central banks are not necessarily indicative of what the general population is doing. Remember, they came up with negative interest rates. People would not generally move towards negative interest rates on their own. But Newmont Mining, this is a good, and they merged with Gold Corp. They said searching for gold is a complex process. The odds are only 1 in 3,000 discoveries that lead to mine development. Only 10% of those have enough gold to mine. So it's getting harder and harder to mine gold, more and more expensive. But thankfully, the price is higher, so they're able to continue to mine the gold. The gold mining business seems to follow a nice trend that the price goes lower, then less gold comes to market, but because the price is lower, maybe there's not the demand, and then when the demand increases because the price is low, the price goes higher, and then because the price goes higher, they can mine more gold and alleviate the the supply shortage to meet the demand. And Newmont has to track all this. A very tough business to run as a gold mining company or silver mining company. All right, let's see if we got anything else on gold. No, that's it. Let's see on silver, and then we're going to take your comments. Oh, one other thing on gold. Romania. We talked about the other night Serbia buying some gold. We mentioned Eastern European banks buying gold. Not any Western European banks, but we mentioned that Poland, Hungary, Serbia, Russia, all buying gold. Romania is not saying they're buying gold, but they're also part of a trend of even Western Central European banks. We're talking about bringing their gold home, like Germany, Austria, Netherlands, Belgium. Romania is saying they want to bring their gold back, and it makes sense. The reason that all these Western European and Eastern European countries had gold overseas, either in London or more likely at the New York Fed, was they were worried that Russia was going to roll across Eastern Europe and into Western Europe, or someone would, and steal their gold. They felt it was safer in the United States. Okay, and now they're asking for it back. And for the most part, they claim they're getting it back. There was initially some controversy whether Germany was going to get it back. Germany claims they received what they asked for back finally. It was interesting because about 5 years ago, they asked for it back, and the New York Fed said, yeah, you could have it. It'd take you about 8 years to get it. And that drove everyone nuts. They said, why would it take 8 years to get it? You just ship it. I mean, it doesn't take that long. Were you going to go out and mine it? And that led people to think the gold wasn't there. In any event, they claim they have it back. Who knows what these central banks are doing, but they are making noises about repatriating gold across not just Eastern Europe, but also in Western Europe. And let's see, silver demand, I think we discussed. And just take a quick look at the silver price and the gold price, and we'll get to your comments. There's the silver price. This is actually incorrect. I think this is up till about a certain point in time on Friday. We're actually below 17. We're about 16.94. And a 10-year chart shows we have not broken out of the downward trend. That trend is still down. You really need to get, well, that's the 24-hour price, but the 10-year, there's your 10-year right there. Oh, I'm still showing the one that, hold on. Let's just see here. Did I print? Nope, I didn't print the 10-year chart. I printed the one-day chart. But the issue is that we haven't yet broken to the upside on the trend. We really need to get above 22 before that happens. Now on gold we have. Let's take a look at the gold price, the 10-year. I wanted to show you this on the silver. I just pulled the wrong chart in my haste. But you can see here, the last 10 years, we hit a peak in 2011. And then we fell continually to 2016, the beginning of the year. We fell all the way down below 1100, about 1090. But we're having difficulty breaking the 1375 mark. We tried in 2016 and 2017 and early 2018 and early 19. And was only until this year that we finally broke above the 1375, went to 1400. Went all the way up to 1550 and are still hovering at 1460, 1470. And that looks like the price of gold is broken out of its downward trend. Silver has not yet done that. All right, let's see. Okay, let's get into your comments and questions and see what's going on. All right, let me just pull up. I always got to pull up the fundraiser. Let's see. Got another patron. Thank you very much for that. We're up to about 20 patrons. Got 5 subscribe star members. All right, there's all your donation information. If you appreciate the Smaulgld channel and want it to continue, you can purchase Smaulgld Mugs if you're a mug stacker, or Smaulgld other branded merchandise. You can Smaulgld by check, money order. No one sends money orders. Actually, someone sent me a postal order twice. Never received a postal order, but they're very nice to get. They work just like a check. You can deposit them in the Smaulgld bank account. P.O. Box 714, Dover, New Hampshire, 03820. And there's the information for Patreon, PayPal, one-time donations, or recurring donations on PayPal, Subscribestar. And, of course, you can donate via Bitcoin or Litecoin by holding up your phone to the QR codes that you see on your screen. I do appreciate those. But I will say that I'm much more likely to receive Litecoin donations at Bitcoin. And what does that tell me? Anecdotally, it tells me that people think, the people that are into cryptocurrencies, that hold cryptocurrencies, that Bitcoin is the store of value. They don't want to spend it, whereas they're more likely to spend their Litecoin. I will take either. Thank you very much. All right, let's see what we have here in the comment section. Oh, we got a good crowd here tonight. All right, Fiona is here. Hello, Fiona. Sheeple, I've heard demand for copper is dissolving for the same reason silver use is dissolving. How silver will be used more and more rare due to being a byproduct of alternative mining. It's possible. I don't know. I mean, that's just wishful thinking that silver is going to be rare and everyone's going to want silver. Yes, silver is a byproduct. 70% of silver mining production is as a byproduct, but 30% is mined directly. But silver is mined not just for copper. It's a byproduct of just about almost every metal, including gold. So I don't see big declines in the amount of silver being produced. I know there's a lot of pumper channels telling you there's going to be no silver mined and there's going to be this massive demand for silver in yoga pants and all these other new uses they're finding, and then it's at the skyrocket. They've been telling you that for 10 years. They don't give you any hard data. They give you this kind of general statement. They keep you buying their silver. I like silver, and I think there is an investment case for it, but I don't like pumping the idea of skyrocketing demand and diminishing supply, because that's what they've been saying. It's going to go extinct and all this other nonsense. All right. Jeff Kona, all the silver mine gets used. There's another one. All the silver mine gets used up and it's never seen again and we're never going to have any more silver. That's nonsense too. Because a lot of silver is recovered. A lot of silver is not recovered because it's not worth recovering. Now you can say that's blasphemy, that's an insult. It's just not economical. They can mine more of it, so they just don't bother. to recycle some of the silver. If the price of silver goes up, they have new ways of recovering silver. There is a lot of silver that is recovered. There's a lot of above ground silver. This idea that there's no silver. You know, if all this was true, silver would be $300 by now. And you've been hearing all these predictions for 10 years. They don't have any inside information. There's no special, oh, they know something and they're telling you something. Silver gets used up. Silver is so useful. Silver is finding more uses in our lives every day. Silver is going to become extinct. Silver set to skyrocket. Buy my silver. Silver is the only asset worth ever thinking about. It's just, when you are involved, if you are a real estate agent, it's the same thing. They're running out of land. They're not making any more of it. You better buy your house now or you're going to be forever priced out of a home. And then if you just listen to real estate pumpers, you think that the only thing you should ever buy in your life is real estate. You listen to silver pumpers, they just keep telling you all about silver. And then you parrot it. That's the worst part. They get you to parrot it. And I get it on my channel. All these parrots telling me the same thing. Mike Baloney says this guy says that. Yeah, and this was supposed to be this decade, 2010 to 2020, the greatest wealth transfer ever. 200 ounces of silver to buy a single family home. And what a bunch of nonsense. And yet people continue to believe this. Why? Because they put charts up, they talk about this, they give you these generalities, or they show you some specific number. Gold, remember, gold back yuan, game changer, is going to create all this demand for gold. So the Chinese are going to make Saudi Arabia take the yuan, and then Saudi Arabia is going to take the yuan, and they're going to buy gold with it. They just make stuff up. None of it happens. And, you know, after 10 years, you would think, oh, no, you'll see. And then another 20 years goes by. You'll see. Yeah, every asset has a spike usually less than every 30 years. Silver's only spiked in 1980 and 2011. Silver's actually, I mean, you think about all the assets that have spiked in the last 30 years. Silver is, okay, once. A lot of assets have spiked many times. So I don't know. I cannot listen to this nonsense where people tell you silver gets used up, they're running out of silver set to skyrocket, it's the best investment, silver is money, period. I don't believe any of that. I like silver, but I don't believe the pumper story. Silver is used in yoga pants, solar panels, they're not going to have enough silver. No. All right, Fiona, there's not much demand for anything material right now, only for silver deflation, it's fine. I guess silver is money, okay, I'm not even going to listen to this stuff. All right. Tough guy, have none. It's only appreciated. Okay. Not a depreciator, I would send it to you. I don't know what that means. All right. Happy Thanksgiving, Sean Maloney says. Litecoin has cheaper transaction fees than Bitcoin. Well, that's true, KS Gixer. If you're going to send me Bitcoin, it's going to cost, you want to send $5, $10. It's not worth sending it, I suppose, for Bitcoin because of the transaction fee. So, in which case, just send more. I know what you're saying, though. You're right. But that does mean it's a transactional currency, KZ Gixer. I mean, the idea that this, just to get off topic here, because that's what we do on Saturday night, is that if Bitcoin is supposedly digital gold, then who's going to spend it? This whole idea that you're going to create Lightning Network and make it easy to spend, that goes against the concept of a digital asset that's like gold. No one's clamoring to spend their gold. That's the last thing you want to do. You want to spend your dollars, your bolivars, your reals. You want to spend your garbage money. You don't want to spend your gold. You'll spend your silver before you spend your gold. All right. Internet tough guy. Who is Internet tough guy? Send me your fiat, please. There he is. Trey Snow, the pumpers work in circuit. Yeah, well, what's interesting is the pumpers aren't that bad. It's that they have an army of followers who hang on their every word, repeat the nonsense, insist that it's true, even though the reality is not true. Because if any of this stuff was true, then silver wouldn't be $17 for 10 years. You can't manipulate. Yeah, you can. Look, I am not saying there's manipulation in every single market. And there's evidence of it. They catch people doing it. But if it was that rare, look, they manipulate the palladium market. They manipulate the rhodium market. They manipulate they manipulate all the markets. But they still manage, if there is a demand for it, they can't manipulate out the demand. Now, what they can do, and they have done, is they can try to make what they call synthetic demand. That is a valid point. But that just shows that silver isn't that useful. If people are comfortable buying silver that isn't silver, meaning they're going to trade a contract, then they really don't want the silver. That means that it's not that valuable. See, that's what people don't understand. If you're satisfied with a paper contract or a digital contract for gold or an ETF and you don't want the gold itself, well, you could say the people are stupid, they don't understand. Okay, but they don't care. That means the demand isn't there if it can be satisfied synthetically. You cannot satisfy gasoline demand synthetically. You need the stuff to drive your car. You can't say, I'll just buy futures and gas and I'll be fine. And I'm going to put the contract in my car and hope it works. No. So why do you actually need the silver? Well, when the collapse happens, oh, there's all that kind of talk too. When the collapse happens, okay. What if there is no collapse? Then what are you going to do? Then you got to stack on monster boxes or coins with faces on them from the Shield. I don't know. All right. Yeah, well, copper, look, a lot of metals are valuable. Copper is very useful. So is nickel. Nickel has a lot of uses. It's just that storing copper and nickel and also fabricating copper and nickel, it's expensive. Little amounts and then you got to stack them up. It's just, the price really has to go very high to make a copper or physical copper or nickel investment worth much. Now, copper and nickel have gone up a lot more than silver in the last, and nickel's gone from like $5-6, I don't know, it's $5-6 a ton. I don't know how you do it, but it's doubled. Went up almost to 11. Let me see how they calculate the price of copper. What is this? Doesn't say. A pound is what it is. Okay, so nickel was $4 a pound in June 2016. It went to $8.20 a pound earlier this year, so it doubled. But it's hard to make money on nickel unless you're buying it and trading it in contract. Anyway, let's see if we got any other comments. Otherwise, I'm going to let you go. I'll be back again tomorrow to cover some more gold. Yeah, Mystic says palladium and nickel would theoretically be used in cold fusion. Nickel's valuable. There's no two ways about it. No two ways about it. All metals are valuable. It's this silver pumper mentality, this almost a cult around silver, that somehow it's the only valuable metal. And it has an interesting history. I know a lot about it. I've done many shows on silver confiscation, silver in the New World, the Silver Mountain in Bolivia. I love learning about silver, the cross of gold, William Jennings Bryan, the crime of 1873. I'm well versed in silver. Don't get me wrong, but the idea that somehow it's the asset of the future and everyone's going to be buying silver, that's just pumper fantasy. And they've got a lot of people connected to it and they watch it. And if I put out a headline, silver set to skyrocket, I'll get more views than if I just mention some fact about silver. People love to believe in something, and silver has caught a small segment of the internet YouTube market. So have fun with it. All right, have a good night, everyone, and we'll see you tomorrow.